So I'm delighted this afternoon to be with Sam Norris of Bond Financial Services. Sam, you regularly present at the Central London Property Network. I'm delighted that we still have you on the 26th of March on a virtual online. Um, like most property meets, it is going to be online over the next
Yeah,
few months. Well, I
yeah,
say next few months, hopefully next few weeks, but maybe
yeah. We'll
months
see.
is,
We'll see what
yeah.
happens.
So look, in terms of lending, in terms of funding for property development, um, it was quite good at the beginning of the year.
Yeah,
We're now into March, mid-March, and of course things change all the time. So depending when the listeners are listening to this as well. So this is 17th of March, and who knows what's it going to be like in April, May, or even at the end of the weekend. But
hmm
do you just want to explain, Sam, a little bit about yourself first of all, and then we go into finance?
yeah, absolutely. I mean, me myself, as you know, a broker at Bond Finance. I've been doing it for 13 years. Most of that time, especially the last sort of 6 or 7, my focus has been entirely on investors and developers. So raising funds for buy-to-let purchases, HMOs, development projects, commercial mortgages, and bridging finance. All the financial tools that investors and developers need. And you're quite right, Brendan. Beginning of this year, we got off to an absolute flyer. I think with Brexit sort of coming to a close, if you like, or at least us having some idea of what was happening there with the whether you're a Tory or a Labour supporter, with a majority government, which adds a bit of strength to any economy. That happening before Christmas, we started the new year in straight out the blocks really, and funding levels have been high, transaction levels have been high. I know that some brokers speak more about it than others in terms of transaction levels, but I myself have just seen tons and tons and tons of activity. So we got off to a great start in 2020. It was almost like we were waiting for something to happen to knock us off our perch a little bit.
So, look, we've had the effect of coronavirus. It's interesting. I was also speaking to, I don't think he classes himself as an economist, but the closest I've spoken to anyone who's economist at the moment, he was talking about the oil price having an effect as well.
hmm
Um, Look, how has it changed in the last week or 48 hours, or has it changed even in the last 24 hours, the funding, Sam?
Well,
Is it such a that's way too narrow and you have to look a little bit longer term?
Well, I think the first thing that we saw was that the Bank of England cut their interest rates, slashed the interest rates, 0.75 to 0.25. That's a big, big, big cut. I know that the Federal Reserve in America have just tried to kick us off our perch, if you like, by getting it down to zero. But yeah, 0.25, insane. What I've been fielding a lot is calls and texts and messages about, oh, where I need to hold off because interest rates are going to go down. Well, it doesn't quite work like that. If you go back 20 years, then yeah, there's probably going to be more of an effect because people were on tracker rates a lot of the time, and so they would see almost an instant impact to those interest to their own interest rates going down. What I'm getting a lot now is people talking about, right, I'm buying or I'm remortgaging soon. Should I hold off or should I try and delay things for a week or two so that I can take advantage of new rates? And I've had to say to all of them pretty much the same thing, in that there's no guarantee that that's going to happen, especially not in the short term, because how interest rates actually work in simplistic terms is that every mortgage product that you see, it's not necessarily the same when it comes to bridging and development, but certainly for mortgages, every product that you see is actually a rate and a product that's connected to an individual funding line. So a bank might say, right, we're going to put aside 500 million, and that's going to be our 2.99% buy-to-let interest rate with a 1995 fee at 70% loan to value, and that's their product. They won't change that until that 500 million has been used, and then they will release a new product to replace that. And so if you look at some lenders, they've got 20 different rates, 20 different products. So rates won't categorically just be cut overnight. They will start to go down over time. So I've said to most of my clients, don't let this delay what you're doing, because there's no certainty as to when that's likely to occur, and it could be months. So and that's if they decide to do it at all. They're under no obligation to cut rates. They can set their rates as and when they want, and the market at the moment is quite strong. I do think rates will start to come down because there's a lot of liquidity, and client and lenders want to, and banks want to get that money out.
When you say the market's quite strong, in what reference?
In terms of the liquidity. So banks have a lot of money. This was basically what distinguishes any kind of economic downturn that we're going to see now in comparison to 10, 12 years ago when we had the credit crunch. There wasn't enough money. Now banks are in funds more than they've ever been in the history of the UK economy, from what I can understand.
So you see it very differently from 2007, 2008.
Chalk and cheese, yeah, absolutely. It's completely different. I think the issue that we have now is that lenders can't get the money out the door quick enough. And it's because of regulation and because of changes in taxation laws and all these various other things that get in the way. That's what's elongating, turnaround times and transaction times when it comes to purchasing and selling property. It's not the lenders themselves not having enough money to complete those transactions. So that's a real positive. That's something that's really strong, and that's not going away. Interest rates going down, again, a positive thing. And I think over the course of the next quarter or so, we are going to start seeing hopefully a bit of an effect to that. I don't think it's going to be as much of an effect as everyone thinks that it is, but I think there is going to have an effect. Now they're the positives. Unfortunately, the negatives that we're probably going to see as a result of the coronavirus are the same that we're going to see in many other industries, and that's just a general slowdown because of availability of people. I myself, I'm actually sitting on my bed at the moment. The wife is in the living room, and I didn't want to disturb her, so I'm sitting on my bed at home. And a lot of people are doing the same. I'm lucky, you're lucky. We have the technology and the ability to work from anywhere in the world. There are a lot of people that don't have that ability, and there are also some parts of the process that require something being done in person. And the big thing, I think, is valuations. Valuations need to pretty much be done face to face. Someone actually needs to go and see a property.
And virtual reality is not sufficient.
It's not. I actually think in the future, this is going off topic a little bit, I think virtual reality will become a big thing in the future. I think that's where valuations potentially might be heading to, which actually would be brilliant for the market, I think. However, at the moment we're not there. We do require for 90% of property purchase and selling transactions in the UK for a physical human being to be there. And if surveyors are, sorry about that.
Disappear.
Just disappear for 2 seconds. If the market, if surveyors are being forced to self-isolate and being at home, then they physically can't go around the properties.
That is a really good point about surveyors. So, whether it's bank surveyors or your own surveyor which you've employed, do bank surveyors work very differently though to your own surveyors?
They generally use the same types of companies. Most mortgage lenders will use eServe, Connells, Allied, these kinds of people anyway, which tend to be panel surveyors, or we're seeing the VAS panel being used a lot now. They're still going to be, they're not going to change the way in which they work, and it's not really going to be too much difference, I think, between the people that we've got. If you went yourself to a local surveyor to going and getting one done through a lender's panel of surveyors, it's still the same issue that we've got. It's just lack of people that are available, and we're seeing that as well with lenders. That's one of the first things I started to see was I was having a discussion with two bridging lenders today that usually they're really quick at coming back to me on stuff, and one of them I've not been able to get in touch with since yesterday morning. And when I did finally get in touch with them this afternoon, they just said, we are working on a skeleton staff. We've got a lot of people self-isolating, so a lot of people at home, but we are not as an organisation set up for people to be able to work from home. And so they're actually losing staff rather than staff being reallocated. I've had lots of emails from other lenders saying, We are working on making sure that our staff can work from home, especially people like business development managers and things like that. They are able to work all over the place, but it's those back office people that are absolutely fundamental to the speed of these sorts of transactions, whether it be a mortgage lender, bridging lender, development lender, whatever. It's those people, those underwriters, the admin staff, the processing staff, the case managers. These are the people that are the unsung heroes a lot of the time of these transactions. And unfortunately, most lenders aren't set up for those people to be able to work outside of the office environment.
Sam, I'm not sure you can like me saying this, but I will say it. So to me, it feels like it's a cash market.
It is. Yeah, there's money. There's lots of money about.
But when I say cash market, it's for the people who've actually got cash, not getting lending.
Absolutely. I mean, look, at any point, there are pros and cons to buying with cash over borrowing. Obviously, from my perspective, and I like to think that I'm quite fair, if I think that somebody is better off buying something with cash, I'll always advise them of that. I'd rather have longevity with my clients than trying to be transactional. And a quick win is often not the way to give rise to that kind of relationship. But you are right. Maybe more than others, this might be a good cash market. If you can complete on transactions quickly through cash, then that can be something you can do. And then maybe once the lending market improves again or gets a bit quicker, funds could be raised post purchase. But then of course that's got its own issues as well. But I think the thing is with sometimes with buying cash is you're losing your cash reserves maybe more than you would if you were able to just put a little bit down and borrow some. That's always going to be the issue. But you're right. In this instance, it could be the difference, because I think there are still opportunities out there. And I said this to a client the other day. There are still opportunities. Mr. and Mrs. Smith from down the road that are desperate to try and move into their retirement home in Malaga still have a deadline to do that, and there's still a pain point there. Somebody that's 6 months behind on their mortgage payments, that happened before coronavirus came along. So they've still got a pain point there that someone needs to go and solve for them. So these pain points are still there, and if it's harder to get the lending because of the processing time or the unavailability of valuers, then that might give the opportunity for those that have got the cash reserves.
Sam, look, maybe when we can catch up in person, we can go through this in a bit more detail. I'm just thinking so many opportunities in prop tech for surveyors out there, or maybe not surveyors, but using property technology. I don't want to upset surveyors either, because I've got.
Oh, I upset surveyors on a daily basis. Don't worry about it.
but possibly when we have things like coronavirus, you can see why prop tech comes in so importantly into the equation as well. Look, we're going to have you joining us on the 20th of this month as well, which is in just a few days, on Friday morning, 9 a.m. Wasn't my decision to have it so early in the morning. Jack asked to do it at 9 a.m.
Bloody Jack.
Yeah. So it's a commercial summit post review, asking those key questions. I'm sure there's going to be some finance questions which will come up as well.
Always is.
So look, that's this coming Friday, and then 26th, my first ever, and for many people, it's their first ever physical meet, which has been converted into Zoom. So Zoom has done very well because of this coronavirus, to be fair.
Absolutely, yeah.
Yeah.
Out of every adversity, there is opportunity. I can't remember who said that, but I think if no one said it, I'm going to coin that. That's quite good, isn't it?
Yeah, no, I'm sure someone must have. Sam, so people can reach you online as well. You're fairly easy to reach, particularly, I would say, on Instagram.
Yeah, that's probably my platform of choice at the moment. Facebook and Instagram. My name on Instagram is @the_Sam_Norris. I wanted to be known as the Sam Norris, the only. And that's the same handle for Twitter as well, and for TikTok for anyone that uses that. But they can also find me on YouTube and Facebook and LinkedIn by typing in my name as well.
So a little bit of a tricky final question. It's not that hard, and it may be just hard to answer. So you said one of the major challenges is surveyors at the moment. I know you said there's back office team as well, but in terms of how much delay do you think the process is? Are we talking 10, 20%? Maybe it's easier to talk in weeks rather than
Yeah, well,
percentages.
a good if we're talking just of surveyors, just to pigeonhole that particular point, which I think might become the issue for the next sort of few weeks at the very least, is to make comparisons to other points of the year when surveyors are actually in high demand, because they're sort of few and far between, and there's few on the ground, which is usually over the holiday months, July and August. And over the Christmas period as well. Traditionally, those periods there aren't that very many surveyors about, because they all go on the holidays at the same time, which is it's school holidays and that sort of stuff. At that time, you can sometimes be waiting 2 to 3 weeks for a slot. So we could. That I think that's the best comparison to make. Is at the moment, if I'm doing a bridge for a client, usually we get someone in 3 to 4 days, max, and then we have to give them a few days to get the report together. At the moment, moving forward, we might be waiting 2 to 3 weeks for those slots, and then having to wait even longer then afterwards, maybe another week, for the reports to come back. Now, if you're doing something like bridging or development finance, there's other things we can get going at the same time. We can be doing the underwriting, we can be doing the legal work. But for a standard mortgage, where things are quite are done sort of in a very particular order,
Mm.
that's where we might see that slowdown happening, because you'll do the underwriting as normal. We'll have maybe some issues because there might be lack of underwriters in the office, but hopefully lenders will get around that issue and have people working from home and have the ability to do that through technology. But then we'll get to the valuation stage, and there'll be then weeks of inactivity on a transaction before it then goes to legals. So that's where I see potentially an issue coming about as a result of the self-isolation, all this kind of stuff.
Sam, I just want to say massive thanks, not just for today, but for taking time out on Friday coming up, the 20th.
No
And just
problem at
to
all.
reiterate, the 26th is a virtual event. It is on, but it's via Zoom as well. So massive thanks, Sam, and massive thanks to the audience out there as well. Thank you.
No problem at all. Cheers.